Hi guys, last video in this mini course where we're going to look at how we develop a strategy, how we combine the technical analysis with the fundamental side of things. As I said before, a trader and an analyst are two completely different jobs. A trader just looks for areas in the market where price might react to, execute a trade, take some profit, or take a loss if you're unfortunate, and move on. You are just executing a strategy, following a process. Now, traders who are fully tech-based, they just take a trade no matter what market environment. They don't care. They have probably a lower success rate with a reliance on risk reward to make profit from the market. There's nothing wrong with that. Thousands of traders have that approach to the market and do very well from it. It just doesn't suit me personally. It doesn't suit a lot of new traders, but there obviously is a different way, and that is having that discretion, being a discretionary trader where you can not pick and choose what setups that you take, strictly speaking, because we're not picking and choosing. We're following a process to establish whether we should take this trade or not. So there's three phases of development. First one is testing your technical analysis. For this, in the resources channel, we have a levels tracker. So this should solely be your focus when you're first learning to trade, is technical analysis. Nothing else, just learn about tech. We only use levels. So if we jump onto this cable chart and go onto the daily, we'll plot all the levels that we see on the chart. So the levels have got a different classification. I'm not going to go into that now because I just want to give you an outline of exactly what we do. So candle body closes, and you know about refinement. We covered that earlier. So if you're doing a levels tracker, then you may want to refine that to the 4 hour. I'm just for this exercise going to leave it on the daily. So that cable level and the price, which is 1.364, will go into the levels tracker, classed as a daily level. This level from last week got added into the tracker, 1.343. Price came into the level, pulled back into the area of potential struggle, APS. Again, that is another video which teaches us how to establish targets for trades, which is just as important as our entry and our execution. So that is a daily intra because it's just in the middle of a trend, but it's visible on the daily time frame. So that worked into the area of potential struggle. We'll note that down, did 40 pips, did minimal drawdown, maybe 5 pips drawdown, 45 pips into the area of potential struggle. So we note that down into the levels tracker. This next level, which is also a daily intra, if price gets there and fails, price doesn't react to the level. By a reaction, I mean even if it's just 3, 4, 5 pips, because all we're looking for at this stage is just to find our ability to pick levels on a chart that price reacts to. If you can do that consistently, then you've got the foundations of a really good trading strategy, because you know that the price is going to react to your level most of the time. Now, I did this levels exercise for a week on about 26 pairs, and we had a 90% success rate. Now, that doesn't mean that every level is a trade, because some only did a few pips, but it means that I'm highly proficient at finding areas on a chart where price is going to react to. So, and all those videos as well are in the channel on the website, so you can watch me do this levels exercise. Once we plotted all these levels, we then wait for price to hit them and record the data. So we're going to be doing this on several pairs, not just cables. So your work's going to increase. Otherwise, you know, you're going to be sitting around doing nothing for a long time if you're only trading one pair. But then you can go down the time frame and you can assess hourly levels. How do they work? Well, if you put this hourly level, this failed today, hourly level down here this morning, hit, worked. You're building up data around levels. Now, if you're on the hourly, you're going to see a much lower success rate because a lot more levels are going to be hit. And then when there's some fundamentals driving the market, the levels aren't going to work because price is just going to smash straight through them, which is essentially exactly what happened here. So that is the first phase of testing your technical analysis. And there's lots of videos on this, on how to do it, in-depth videos with instructions on how, and demonstration videos of how I do it. So that is phase one, testing your technical analysis. If you've got a success rate of in 80% of the levels that you plot on the charts, consider yourself as you're good to go. You can move on to the next stage of the process, which is testing your understanding of flows and the tech. So market flows, whenever something is driving the market, driving pricing. So that's another column in the levels tracker. So price gets to here, this 1 hour level this morning, goes straight through. Well, our market flows in play. Well, let's have a look at other pound pairs. So GA moving higher, higher, GN. So all pound pairs are moving higher. So yes, flows were in play. And we had UK data, 2 sets of UK data this morning. We had employment data and MPMI, and both were positive for the UK. So pound has been on a little bit of a rally this morning. So would you take a 1 hour level when price is being driven by flows? Well, I personally wouldn't, but if you have amassed a lot of data over a few weeks, months to show you how 1 hour levels on cable perform when market flows are happening, you're going to know what to expect. And I guarantee that you will look at the 1 hour levels and it will say, yeah, that's not something that you should try. So every level that we have, we need to assess when price gets there, are market flows in play and how did that level perform? And then over time, you will see that the daily levels, stronger levels, have a higher success rate in market flows. Now, when all pound pairs are not doing the same thing, it's likely that, this intraday that we're at now, this 4 hour level, may give a pullback. The hourly one may have given a pullback. Now, if we look at the 1 hour level from this morning as well at 6 a.m, that worked. His price bounced from there. Then we had the data at 7 and then price started to rally. Now, if the data came out the other way, that would have failed. So you can see we're establishing the performance of our levels in different market conditions. And then phase 3 is just go out there and trade it. So rather than just doing a levels exercise, if you want, you can place pending orders on these, any phase that you like. Just make sure that you're not doing a funded challenge or actually taking trades that are going to make you emotional. So when you're in phase 3, place pending orders on all of these. But then when the market gets there, so set an alert before the pending order. When the market gets towards this level, 1 hour, are we seeing market flows? Yes, we are. Don't take the trade until pound gets to a decent level. Now, this isn't a decent level because it's one that worked last week. Our next level of interest from our weekend analysis was up here. Now, there's a chance that this is going to work, and that is for you as a trader to establish. It's not a signal service, and I'm not going to say take this. It's not something I'm going to try, but it might work. Now, we're pretty close to NFP. I'm not taking an intraday level to be positioned before NFP. And again, this is what your data collection is going to tell you, that we need to just wait to NFP to happen, because if stocks go higher on the back of NFP, we're going to see dollar weakness and we're going to see cable up here. Now, is this a level to take when the market's moving higher? Well, we need to wait until the US stock market goes higher and hits a level. So mark up our levels on the US stock market. We've got a couple of levels. If stocks make a move into this level and pound US dollar is at your level of interest, then take the trade. But if pound US dollar is here and US 500 hasn't hit the level yet, just leave it. Pound US dollar, let it go past the level. And then when US 500 hits the level, then sell pound. Because if US 500 flows stop, then we're going to see a very good entry for a sell on cable. But that will still go in your levels tracker as this level here, because that's what we're basing our trade from. But you just have to put a note in there that you didn't execute from that level due to market flows being in play. And that's the basis of the strategy. And this needs to be done for weeks and months. And I'm in the channel, Jay's in the channel, there's other experienced traders in the channel that can assist you and help you on this journey. And a lot of traders are almost afraid to try something different. But if it's not something you've considered before, treating the fundamentals and the market in this way, I suggest you just give it a go, because what have you got to lose? But what I must say as well is, if you're in one of these phases and you're going to try to do a funded account challenge, don't bother, because you shouldn't be doing a funded account challenge until you know that you can pass it, because you've done phase 2 and phase 3 and you've seen consistently good results. Don't try to learn about the technical analysis, learn about understanding flows, testing the strategy, and also trying to pass a funded account challenge, because the mental side of things is just going to be too much. You're not going to be able to do it. The emotional side that comes in, you're going to be pulling out of taking levels because you don't think it's going to work, but you just got to follow a process. We're not trading what we think. We're using facts from the information in front of us on the charts to establish whether we're going to take a trade or not. And if you can present the reasoning on your journal and levels tracker, then it's fine if you try the trade. But if you back out of something and it works and the reasoning was because you didn't think it would work, it isn't acceptable. And that's what I see a lot of people who are in these phases of development and then pulling themselves apart mentally, trying to pass a funded account challenge. It's not a good place to be. So if you've got any questions, drop us a comment or jump into the Discord channel and we'll be available to discuss any questions. Cheers, guys.